Okay, traders, we're looking at S&P 500 M&A futures. We're looking at 2000 tick chart, and we're going to try to understand how price action moves, how price action works, just by reading the naked candlesticks as they are printing on a chart without using any indicators. The only indicators that we're using is the 21 bar exponential moving average, this blue line, but this is just a supportive indicator. Now, I have a lot of new traders who are asking me about time-based alternative to 2000 tick chart. You can, for example, use 1 minute chart, but what we're going to talk about in this video works in all markets and all time frames. The structure we're looking at is a trend range structure, which means my goal is automatically try to locate important key levels, because trend range is always bounded by two extremes. And later on during the day, if the trend range is going to be the pattern, I may end up working with these key levels. So I cannot underestimate identifying the proper key level. So what I can do, I can use the low of the day, but I also at the same time need to have enough confirmations. By this point on, this is the lowest point of the day, but I have 3 confirmations here. So this is a very reasonable place for me to use it as an important key level. I'm just going to copy it. If I'm going to select the highest point during overnight session, this is where the session started. I can see that I don't have much confirmation here, so I'm just going to drag it slightly lower to have more confirmation here, and this is looking really well at this point on. So prices are breaking to the upside, and notice, since I'm in a trend range structure, most breakouts of trend ranges will fail, and there is a possibility for prices to come back and test this important key level, because after prices broke the trend range formation, we never tested this level, which a lot of times may get tested. And also, as I see this first bullish spike, I can measure it, copy the lag, and try to predict where the market is heading, because market likes to move in pairs of twos. So this is the first bullish lag, correction, and the second bullish leg is working higher. Notice we overshot it a little bit, but it's okay. It doesn't have to be perfectly measured. You can already see the buyers are taking profit and sellers are jumping into the market. Okay, market is correcting. I'm just going to draw the trend line because I want to stay on the right side of the market. And notice prices are coming back and testing potentially this key level. Okay, but we're not testing quite yet. Okay, so it may not happen. We may straight up reverse, but no, market eventually came back and tested it. So at this point on, 2 scenarios in the market according to price action can happen. The key level is going to hold, buyers are going to jump into the market and we're going to get bullish reversal, or there is not going to be significant amount of buyers and we're going to pull back into trend range and then eventually continue pushing all the way down. So these are the 2 scenarios they are thinking about, and you're going to see if you get reaction around this important key level. So you can see we have a nice bullish bar. Prices are reacting decently. Also notice if I'm going to take a look at this price action, I have 1 bearish leg down, correction, 2nd bearish leg down. So market likes to move in pairs of twos. If you learn to read the price action without any crutches, without any indicators, stochastics, RSIs, order flow, you will be able to understand how price action works, and you'll be able to predict the moves where price action are heading. And it's the beauty of studying price action, because sometimes you may use indicators and you may even predict a couple of these moves, but you don't really know why prices are heading this way, why the price has these targets. So it is important to really dive into price action and to kind of be free away from these indicators that are just cluttering your chart and leading you on the wrong path. So you can see, notice what is happening. We have new low formed, first entry short, pullback, second entry short. So we have 2 attempts to sell, but you're selling directly into this important key level, into the support far away from EMA. So if you're a seller, you're selling right into important key level after 2-legged pullback played out, and you're not at the EMA, so you cannot sell at this point on. If you want to sell as a seller, you need to see prices pushing below EMA, and then you can sell. And you have a nice bullish bar, new low, first entry short, pullback, second entry short. Buyers are coming to the market, the key level is holding, and this is a great high probability setup, the first setup for the day. Decent bullish bar, the key level tested, and buyers are jumping to the market. So at this point you would be expecting reversal to the upside, but the reversal is not happening. So this is quite confusing, because this is strong rejection again, and you have equal rejection to the upside. So this is getting a little bit more confusing, but okay, maybe that can happen. This was just additional correction. The key level is holding again. Look at this big bullish momentum. So I'm just going to redraw the channel. I'm drawing these channels because I want to follow the trend line rule. I expect for prices to create new high, for this uptrend because we just have a break. And notice you have a new low, first entry short, pullback, second entry short failure, and new high, first entry long, second entry long. And this setup, honestly, is not a bad setup, but you have to be a little bit more advanced chart reader because EMA flattened, you're starting to go a little bit sideways, so the structure is not as clear as you would want. You would want to buy at the low, but it is a failed second entry short and a second entry long, great bullish bar. So the setup is definitely a great setup to take if you're a more advanced trader. Notice, new high has been made. You also have first leg up, pullback, second leg up, and you have strong rejection down. So this is important because if the key level is going to generate strong enough buying pressure, you're supposed to push above EMA and you're supposed to continue in the bullish momentum. The fact that it's not happening, you're pushing below EMA here, pushing below EMA here, this is indicating that the bearish momentum may start. And notice, you're truly pulling back all the way back into trend range. So at this point on, you need to adapt. You already broke back into trend range. The key level held temporarily. It never really managed to stay above EMA for a long time. Every single time when you push above EMA, you always reverse down. So this is indicating that right now the trend range is coming into play and you have to redraw the channel because you're following right now the shortened bias. In that case, you cannot go wrong. And notice you have a new low, first entry short, pullback, second entry short possibly. You'd expect for a second entry short to form at the EMA because you expect new low for the downtrend, and high probability setup is a second entry short at the EMA at the key entry point, but it never fully pulled back, so unfortunately there is no great setup. Instead of prices reversing above EMA after you have a break in new low, notice prices keep continuing working lower. When I was watching this, I was trying to look for possible spike and a channel pattern because it felt like there may be additional continuation of this bearish momentum. At this point on, the spike and a channel has not been confirmed just yet. But notice what happened. You have nice big bearish bar confirming possible spike and a channel, and the spike and a channel at this point on got confirmed. So as prices are pulling back above EMA, notice what is happening. You have push above EMA and you have push below EMA suddenly and quickly. So if there is this downtrend that has a break and you have first leg down, second leg down, prices are supposed to push above EMA, stay above EMA, and the high low is supposed to form above EMA. Because remember, you can get break a new low and sometimes you can get two legs to new low. That is not uncommon. But even after you have a break, two legs down, and prices cannot stay above EMA and you have such a quick back reversal below EMA, this is indicating that the bearish momentum may resume, and this confirmed the spike and the channel. So as I'm observing prices pulling back below EMA, and I can see new low, first entry short pullback, second entry short, we are still below EMA. Bulls are going to get trapped buying below EMA, but they failed to stay above EMA, and this spike and channel needs to get new extreme. So this is a first entry short pullback, second entry short, and this is a great high probability setup. This was my first trade for the day, decent bearish bar, and market created new extreme. Okay, so this is the reason why, even though you have quite a spike above EMA, the fact that you push so strongly down and you haven't stayed above EMA after two legs down supposedly, that tells you that the spike and the channel is valid. New extreme is formed, and notice what is happening. You have another new low, first entry short, pullback, second entry short. But can I sell? I cannot, because all downtrends have new extreme. I cannot draw any wider pattern because I'm in a trading range structure, so I only need to follow the tight channels. This is what can happen if you follow two wide channels in trading ranges. Notice market reversed back up. What I'm going to do, going to redraw the channel because prices keep confirming it. This is nicely fitting channel, and I have a break of this channel. So at this point on, buyers are expecting for prices to create new high for this uptrend following the trendline rule. I have a new high, first entry long, so I expect to get a second entry long. I never get it. I just get a first entry longs without a high probability setup. Notice new high has been made. I'm going to redraw the downtrend. I have new high, first entry long, second entry long, but I'm not interested because first of all, downtrend is in play. Second of all, this uptrend created new high, and I can also measure first leg like this, second leg like this, and make it just a little bit steeper. And it looks like first leg pullback, second leg to new high, downtrend played away to break new low, and this was quite surprising. But I'm not really interested about buy. And notice what is happening. We're pushing back below EMA. Zoom out, and this is how these important key levels may come into play. This is why you need to get the experience to learn to spot these key levels, to learn how to work with them, because this key level acted as a resistance at the start of the session because we were looking at trailing range. Here it acted as a support, indicated a little bit of a buying pressure, opportunities for high probability longs. But after you pushed back into a trailing range, notice the key level is being tested from the other side. It acts as a resistance again, as it was supposed to at the beginning of the session, because right here you're back into trailing range, and this important key level is acting as a resistance and showing some selling pressure. So if I'm going to combine this important key level with the fact that the uptrend played out with the break new high, and you're pushing below EMA, you expect for bearish momentum to resume. Okay, and you're pushing strongly below EMA. So always, I need to redraw the channels. I'm just going to copy it, put it at the bottom. Notice I have a new low, first entry short, second entry short. I would expect to get a second entry short at the EMA, just like you would be expecting right here. But unfortunately, prices never pull back close enough to EMA, and market just continue working lower. Notice where the price action is located. Once you see price action so close to the main key level, you expect for prices to reach this important key level. It is quite uncommon for prices to be this close to key level while the bearish bias is this strong and not actually testing the main key level. So once I see this, I'm going to redraw the channel because it is quite strong. It's getting confirmed here. So why the channel is getting confirmed here? It's getting confirmed by 3 confirmations. And I expect for prices to reach this important key level. This is pretty typical in trailing ranges. So I'm going to follow the trend line rule. I have a new low, first entry short, pull back, second entry short. So I have first leg up, pull back, second leg up. This would have been a nice second entry short to leg up pullback. Remember, downtrend needs to get new extreme following the trend line rule. Overall bias in trailing range is bearish. But notice the signal bar I have to sell below. Bullish doji, it formed above EMA and the bullish rejection was quite strong. It worked, but the signal bar was just not the greatest. And notice new high, first entry long, second entry long failure. But the same problem, I have a bullish bar. I want to sell below nice juicy bearish bar. Also at this point on, I'm too sideways. This is really stacked, 20 bars right next to each other. You can see what can happen. You would have gotten stopped out just by one tick and to eventually see prices going back all the way down. And this point on, you expect for prices to finally break this formation and make it all the way down to this important key level, but you can't really sell because it is too big and too stacked. So you just have to sit here and watch the price session. So you can see the key level is coming into play. Are you looking for early reversal? Well, not just yet, not too quickly, because from the very beginning of the downtrend, you haven't closed above EMA once. You see multiple EMA rejections, so the downtrend may be a little bit stronger. You can see you're pushing below EMA, and suddenly the price action is starting to lose steam. The bearish momentum is not that strong, and you're starting to push above EMA. So notice I'm going to zoom out again, and this is where the important key level is coming into play again. Since the overall pattern is trailing range, you may expect reaction here, and most breakouts of trailing ranges will fail. So you may pull back into trailing range, and especially if the downtrend played out. Can I look for any additional spike in a channel? Not really, because I'm at the bottom of the big trailing range, so I cannot really draw any wider spike in a channel. I need to respect break, multiple legs to new extreme. Actually, I can kind of see visual 2 legs down, even though it is not so clear. But it is like a sideways movement that broke the channel. First leg, correction, second leg down. These 2-legged pullbacks are everywhere on the chart. Notice we have new low, first entry short, pullback, second entry short failure, but it formed below EMA. Had this second entry short failure formed above EMA, this would have been a nice reversal pattern, because downtrend played out with 2 legs down. Most breakouts will fail. You're combining the trend line rule with the trailing range rule, so you expect for prices to continue working higher, but you're close below EMA, so it is a little bit more advanced. Not the bad idea to go long. I would have preferred prices to give me more information to really tell me that buyers are jumping in the market, and I want to see prices closing above EMA. That never happened. Market just continue working higher. You have a break, new high. Key level is coming into play again, and prices are working higher. So now that I see the structure, I can see that the bullish trend played out, and also I'm going to see I have first leg up, pull back, second leg up again. And I can also see that the last hour we've been working sideways. So what I'm going to do, I'm going to try to predict a possible trading range, something like this. Why? Because uptrend already has a break new high, and once I see two legs after failed breakout and uptrend already played out and you can't even make it to the middle of trading range, this is indicating that the bullish momentum is weak, because you would expect after downtrend played out and a failed breakout to have quite a strong bullish reversal. The fact that buyers cannot really make it higher and you only have this one leg correction, second leg depletion, and you're not even in the middle of trading range is indicating bearish possible imbalance. For that reason, I'm trying to view this as a smaller trading range at the bottom of the main trading range. And notice prices are indeed confirming my initial analysis. I'm going to redraw the pattern. You can see push below EMA confirming the bearish momentum, new high, first entry long, pullback, second entry long failure, confirming the channel. You're right at the EMA, so two key entry points are holding. There's no congestion, nice bearish bar. This signal bar is nice bullish, so the buyers are going to get trapped going long below EMA after uptrend played out. While you expect for prices to reach the support, this is a great high probability setup. Failed second entry long, and this was my second trade for the day that I took, and you can see it almost scalped, but eventually I got stopped out. And this can happen. This is absolutely a great trade following price action rules. This is part of this business. This is part of being a trader. You cannot feel frustrated. I was completely unfazed because I have to take this setup every single time. Remember, trading is about probabilities. We only make money if we follow the rules. So in the long run, we have numbers on our side. You can see that the analysis hasn't really changed. You have new low, first entry short, pullback, second entry short. Now this would have been a great opportunity for me to re-enter because this is a second entry short, but the signal bar is not the greatest. And since I'm stuck in this consolidating structure, I'm taking quite a risk to sell. So I really want to see great bearish signal bar to see some confirmation, but the analysis still remains the same. Uptrend played out, downtrend needs to get new low, target is the support. So we really expect for prices to continue working lower, but there's really no safe way to enter. This would have been decent setup had the signal bar been better. And notice this failure was just a little bit of a fake out. It just stalled a little bit for whatever reason. Market created the second leg down, first leg down, second leg down. The support is coming into play and the market is starting to reverse. So I'm just going to redraw the channel. It's possible that the trend range is a little bit higher. Notice, and we're pulling back below this small little resistance again. Uptrend has a break, attempt to create new high, and notice this is starting to look very similar to what we had down here. Bearish imbalance overall, weak bullish momentum, uptrend has a break new high, push below EMA just like here. I have a new high, first entry long, pullback, second entry long failure, just like I had it right here. So if I get a break below this bar, I can sell. But notice there was no break below this big bearish bar, failed second entry long. Unfortunately, it stalled. So once you see failure stalling like this, which is what is not supposed to happen because failures are supposed to be traps, they're supposed to generate quite a decent momentum. This is a little bit concerning. So for that reason, this is not the best setup to take. You can see it would have ended up working. This is why you can't really cherry pick. You can't really, stress about losing trades too much because these two setups are very similar. This one just stalled a little bit. It was a losing trade, but this setup right here, if you still follow the same rules, you would have been able to make it back quickly. I'm going to mark it from price action perspective because next time you see this setup, you may get triggered right below this bar right here. Prices are breaking lower. Okay, we're starting to have decent bearish momentum, so I'm going to redraw a wider pattern because the move is not proportionate. And if I'm going to zoom back, even though I'm in the overall trend range, notice the strong bearish imbalance, a consistent series of lower highs, low lows. So there is a possibility for a wider pattern to be present because even though structure is looking like a trend range, basically from the very market open, you trade it down. This channel is getting confirmed quite nicely off the highs here and here. So I cannot really argue with the channel like this. Prices are working lower. We have a break and new low for the short-term channel. We have another second entry short, but we just had a break new low. The signal bar is not the greatest. This setup was not terrible because you can see also new high, first entry long, second entry long failure. If I count off the highs of the pullback to EMA, and you can see EMA rejections. So this setup is definitely not horrible, but since the signal bar is not the greatest, and you just hit a break and you low for the downtrend, you're not really sure that the market is going to continue working lower. But the failed second entry long and the extra rejections are really adding a little bit more confidence to the setup. And notice overextended push phase, because if you're going to zoom back, you can see how the trends are behaving. You have a push phase, correction phase, push phase, correction phase, push phase. So if you're at the bottom of a channel, you can expect bounce and correction phase. And notice you have also overshoot, which can lead to possible break of a channel or straight up reversal. So push phase overextended. Sometimes traders, they just focus on this one little move down and they completely forget to zoom back and take into consideration the entire structure. You need to look back, look for a bigger pattern, and try to follow these rules, because sometimes traders, they can get too zoomed in on this on this push phase, and they can take a second entry short at the EMA, and this is where the market will pivot and the correction phase will start. Fortunately, there was no second entry short at the EMA. Market straight up reversed without any decent setup. And once you can see such a strong bullish momentum, this is where you start expecting possible overshoot kicking in strongly and breaking the channel. Okay. And notice what you have. New high, first entry long, pullback, second entry long, almost. It would have looked like a second entry long, but there is micro double top, which technically we have to reset the count. But notice, first leg down, pullback, second leg down. This visual, it looks like a clean two-legged pullback. There is no congestion. You're at two key entry points, EMA and the trend line. Nice bullish bar. I will mark it because more advanced trader can take it. I didn't take it because I really like following strictly the rules. Micro double top resets the count. But now you can see strong bullish momentum. You're looking at the overshoot, so you expect the break of a channel, the main one, two key entry points, and it looks visual like a two-legged pullback. Decent high probability setup. Eventually you overextended even this initial channel, so you have overshoot here, so you can get possible break, which you can see prices are breaking the channel eventually. So this is quite a volatile area on the chart. No clean high probability setup. You can see market almost testing this key level, and market is pushing back up. Okay, so what you're expecting in this particular scenario, if I'm going to zoom back, here the question may arise whether you're expecting still new low for this downtrend or you're expecting new high for this uptrend. Now, when I was watching this, I was expecting new high for this uptrend. Why? Because this was such a massive push up. You retraced so much of the downtrend and now you're back into this trend range. If this was a main downtrend without a trend range, if this was just a bearish downtrend structure, I would be definitely leaning more towards getting a new low. But since you have overshoot, you're back in trend range and this main key level is coming into play again. At this point on, this move was so big that you are following these rules and you're sticking to the bullish uptrend and you're switching from the bearish bias to the bullish one because you're back in the trend range. It is holding again, and this move retraced too much of the initial downtrend. So it is not a strong downtrend day, it was mainly a trend range day. So I expect for this uptrend to get a new high. You only get a higher low. I'm going to redraw the wider pattern because I expect for prices to continue working higher. I can see that the prices are pushing below EMA. I cannot really just sell too quickly. We have new low, first entry short pullback, second entry short, failure. Below EMA, I cannot go long. I don't really want to go short just yet because the downtrend just has a small break, new low. Notice you have a lower high, new low, first entry short, second entry short, and a lower high confirmation setup. This is not the bad setup because EMA keeps holding prices. A lower high confirmed the second entry short. Because if you're not sure which direction the market is going to go, the lower high is the ultimate confirmation. The buyers got trapped going long below EMA, kind of in the middle of no man's land. But I'm still leaning towards bullish bias overall. Okay, this downtrend definitely has a break, new low. Two uptrend needs new high, this one and this one. So I'm not really interested in selling. You can see prices are finally breaking above the exponential moving average. So I'm going to redraw the channel using these first few swings. Downtrend played out. Notice how it's getting two sideways, EMA flattening, and I have new low, first entry short pullback, second entry short failure. great bullish signal bar. 2 key entry points are holding, EMA and the trend line, and market kept going sideways eventually through the close. A lot of behavior of price action today to study. The key levels are coming into play throughout the entire day. You can see overextended pushways leading to overshoot breakaway channel or possible reversal, and now the trend range is back into play and you can expect for prices to create new extremes. So decent price action overall. Some of these setups didn't really form that well, but overall fairly easy price action to navigate.